Alright guys, and here on our news it says top investor XRP price will happen instantly, and here's what I overheard. That's coming from our news source Times tabloid. So, is retail being tricked into selling while whales corner the market? Imagine you are sitting at a high-end restaurant, and at the table next to you, a group of institutional fund managers are whispering about a financial asset. They aren't talking about a slow, gradual climb over the next 10 years. They are talking about a sudden overnight reset that switches the global financial system from first gear straight into overdrive. So today, that exact scenario is playing out right now in the digital asset space. While everyday retail investors are panic selling through every minor price dip, the biggest players in the game are quietly executing a massive cornering of the market. A prominent analyst right here and a commentator known on X as digital asset investor just highlighted some breathtaking data that explains exactly what is happening behind the scenes. Wallets holding more than 1 million XRP tokens now control over 74% of the circulating supply. So let that sink in for a moment. Nearly 3/4 of all available supply is locked up in the hands of the wealthy elite. Over the last 6 months alone, these millionaire wallets have swallowed up an additional 1.53 billion XRP. So in this video, we are breaking down why this hidden accumulation is happening, why a gradual price rise might actually be a technical impossibility, and what this means for anyone watching this market right now. Alright, so let's start with our very first question. Why is a sudden overnight revaluation a technical necessity? When we look at traditional markets, we used to seeing assets climb like a staircase. Up a little bit, rest, and then up a little more. But when it comes to global cross-border settlements, that model breaks down completely. Digital asset investor reference insights from an analyst Charo Sun, pointing back to the critical SEC and CFTC classification that visually labeled XRP as a digital commodity. This classification changed the entire game because it laid the groundwork for the tokenization of trillions of dollars in real-world assets. The core argument here is that a slow, steady price increase cannot mathematically support the sheer volume of global wealth waiting to move across the blockchain. If you try to run $1 trillion through a pipeline that is only priced for pennies, the system chokes. So, here comes my opinion about this. I strongly lean toward this technical reality. If a major global liquidity hub or central banking network decides to route even 1% of their institutional pools through the XRP ledger, the token price has to jump into 3-digit territory instantly just to clear the transactions without causing massive slippage. It's like a high-speed train network. You don't build the track while the train is moving or at 200 miles per hour. You build the infrastructure, you set the power levels, and then you flip the switch. The whales know this switch is coming, which is why they are draining the exchanges of every available token while retail looks the other way. Right? Now, as for our next question, how do fixed supply and institutional velocity create predictable upward pressure? To understand the mechanics of this sudden move, we have to look at how supply and demand interact under the hood of the ledger. Digital asset investors shared a fascinating clip of Ripple CEO Brad Garlinghouse speaking at MIT, alongside perspectives from former Ripple CTO David Schwartz. They both pointed to a very specific economic formula, a strictly fixed token supply paired with rapidly rising institutional utility. When utility-driven volume enters the network, it creates a baseline demand that is completely independent of speculation. Banks don't care about market hype. They care about moving capital. However, once the utility starts pushing the asset value upward, it acts like a beacon for the rest of the financial world. Speculators notice the move, they rush in to catch the wave, and they accelerate the upward momentum exponentially. So, here comes my opinion to that. My perspective on this is that we are witnessing the construction of a financial black hole. When you have a hard cap on the number of tokens that will ever exist, and you introduce giant fintech engines using those exact tokens for liquidity, the available supply on the open market shrinks to almost nothing. It is a predictable squeeze. You cannot have multi-billion-dollar corridors opening up without the underlying asset experiencing an aggressive revaluation. The retail market treats this like a standard tech stock, but the data tells us it is behaving much more like a core infrastructure asset. Now, can Ripple's growing business success carry the token with it? It is also crucial to look at what Ripple is doing as a corporation entirely outside of the token itself. The company has been aggressively expanding its global footprint, recently acquiring a significant stake in Flutterwave, which values the African fintech giant at a $3.3 billion. On top of that, the corporate revenue run rate is projected to hit $1 billion by the end of 2026, completely excluding any tokens held on their balance sheet. Furthermore, their RLUSD stablecoin has already climbed to a market cap of nearly $1.6 billion. So, from my viewpoint as a market observer, this corporate strength provides an incredible safety net for the entire ecosystem. When the company building the primary software rails for global settlement is highly profitable, well capitalized, and expanding into massive emerging markets like Africa, it eliminates the project failure risk that plagues 99% of the crypto space. They aren't selling tokens to keep the lights on. They are generating massive traditional revenue. This gives them the runway to wait out any temporary regulatory hurdles while continuing to build deep institutional partnerships globally. Right? Now, will the upcoming August legislative target be the final catalyst? So let's look at the immediate price levels in the political landscape. The asset recently experienced a brief 10% rally to $1.25 before easing back down to key support at $1.20. Interestingly, social sentiment recently hit its weakest reading since the flash crash of late 2025. Historically, whenever the public sentiment hits rock bottom like this, it has marked the exact moment before a massive structural rebound. On the regulatory side, the head of the digital asset research, Charles Schwab, recently noted that the passing of the Clarity Act could act as an unprecedented rocket fuel catalyst. Right now, Galaxy Research places the probability of this bill passing at a staggering 75%, with a presidential signature targeted for early August of 2026 or this year. This ties directly into long-term institutional forecasts such as Standard Chartered's projected price target of $27 to $28. Now, I always tell people to watch what institutions do, not what they say. When a giant like Charles Schwab is openly discussing the impact of the Clarity Act, and research firms are pointing to an August deadline, the timeline is getting incredibly tight. The weak social sentiment right now is a classic psychological shakeout designed to clear out impatient holders before the major legislative decisions are made. If the 75% odds hold true and we get a signature in August, the current $1.20 support level will look like ancient history. Right? Now, here comes my overall conclusion about this. When we piece together the macro puzzle of mid-2026, the picture becomes clear. We have millionaire wallets hoarding 74% of the supply, corporate revenue hitting $1 billion, a massive regulatory catalyst scheduled for August, and a mathematical requirement for an instant revaluation to support tokenized asset flows. The strategy of the largest holders is obvious. They are positioning themselves ahead of a structural system reset. The market rarely gives you a long, polite warning before a major rotation of wealth. It happens in the blink of an eye, leaving the unprepared behind. Stay grounded in the data, keep a close watch on the upcoming August legislative milestone, and pay attention to where the big money is flowing. Right? And this finally ends our video. Thank you very much for watching and see you on the next one, or you might just as well watch this next video right here.